What's up, everyone, and welcome to the Long Game Podcast hosted by Kopelman and Jacob Turner. In each episode, you'll hear us break down financial topics that are relevant to you and your situation. Our goal is to help bring credible financial information to you in short, bite-sized episodes.
All opinions expressed on this show are for educational, informational, and entertainment purposes only. Nothing on the Long Game Podcast should be considered advice. Always consult with your team of professionals before making any decisions regarding your finances. All right, everyone. Welcome back to another episode of the Long Game Podcast. I'm Jacob Turner here with my co-host Thomas Kopelman. And today we're going to be talking about an insurance coverage that's honestly probably one of my favorites. And look, we get it, like insurance is boring. We don't want to talk about it. But the reality is this segment that we've been going through in this series is really important and vital for you to understand. And what we're going to talk about today is an insurance coverage that, in my opinion, almost every high net worth individual needs. And people that are on their way to becoming high net worth need to understand what this coverage is. And the reason why it's so valuable is in terms of the cost that you pay and the value that you get or the protection that you have in place. I can't think of a more valuable insurance coverage. So with that, we're going to be talking about something called umbrella insurance coverage. And this is something that I didn't understand anything about when I first came into money. And this is something that is probably the biggest gap that I see now as an advisor working with clients that are coming into money. So Thomas, give us a little breakdown on what is umbrella insurance, why it's so valuable, and how we use it for clients.
Totally. And I think, real quick, I love the compliance person in you who basically said every single person needs it without being okay to say it because, compliance would be there. And that's the right way to say it. Like realistically, very hard to think of a situation where you wouldn't want it. I have some clients who actually can't get it or can't get a certain coverage amount, and we'll talk about why. But let's just go through a story. And I think this is how I use it with all my clients. And we just think about, right, you have a kid, they're 17 years old, they're driving home on a Friday night after a football game, they get in a car accident, and they hurt somebody else really poorly. We don't have to go deeper than that, right? They hurt the person, it's going to be $3 million out of pocket. And the first thing that's going to happen is it's going to go to your insurance. And they're going to look at your auto insurance and say, how much coverage do you have, right? And basically, you're going to have this hopefully maxed out 250 and 500,000, right? So that's 250 per person, 500 per accident. That's going to go there. If that's all the coverage you have, well, you can basically take 3 million minus that and understand what's going to come out of pocket. And for the average person, and even the average high net worth person, that is very detrimental to you, right? Like you do not want to have that large of an outlay of cash. And so basically, you need what's called umbrella insurance. And umbrella got its name because it's literally like an umbrella sitting on top of all of your other policies, specifically auto and homeowners. We talked about auto and homeowners in the last two episodes. If you go to your insurance person and say, I need umbrella, they'll tell you whether your auto and your homeowners are good because you can't get umbrella unless you max out those two. So one thing that a lot of my clients say is like, why would I max those out if I can just get a couple million of umbrella? Well, they're not going to allow you to have umbrella unless the liability coverages are maxed out on those two. And if you talk to any insurance person, any estate planning attorney, they will go through story after story after story after story of situations where people had to use umbrella. I have a client right now who's brand new, and the last year and a half, they've gone through this similar thing. Wife got in a car accident. It's about $1.5 million. And luckily they had umbrella insurance, right? So this umbrella insurance sits on top. It's going to pay out that. You also get the lawyers of the umbrella insurance company to be your lawyers to help you with it. And, if we looked anywhere, best insurance people best lawyers are most times going to be in the insurance space.
Yeah, I think that's a really important point. Like the idea of umbrella insurance is that it's there in the worst case scenario, but ideally you don't actually have to use it. But let's just play out that same scenario, right? So like somebody gets into a car accident, and whether it's you, whether it's somebody in your family, and somebody sues you, and you have a $5 million umbrella policy. Well, I'm going to tell you who does not want to pay out that money, the insurance company. So in theory, the insurance company is going to be able to hire their best attorney to say, okay, well, what can we do to potentially settle for less than this $5 million? And again, when we think about umbrella insurance, like you mentioned, Thomas, like this is an overarching form of coverage that's above everything else. But one thing I want people to understand is we're talking about millions of dollars in coverage. So a lot of times people think, okay, this is going to cost me a lot of money. But in reality, and it all depends on your situation, what type of potential exclusions you have in the umbrella policy, other coverages you have, what kind of provider you have, et cetera, what kind of drivers you have in the house. But you're probably looking at somewhere between about $150 a month to $500 a month. I'm sorry, $150 a year to $500 a year, depending on per million of coverage. So we're not talking a significant amount of money here. And we're talking significant coverage. The other thing that I would say is we live in the age of information. So if you go online and you Google your name, whether you want to be known or not, chances are somebody's going to be able to find out something about you. And if you're anything like a lot of Thomas's Eyes clients and you either own a business or in my situation, you are a professional athlete, there's a pretty good likelihood that somebody can figure out about how much money you make or quote unquote how successful you are. And the chances are if you get into that car accident and they find out who you are and they Google your name and they can find out any information about you, you essentially have a target on your back. And we want to make sure that when we're thinking about risk, we're trying to minimize that target as much as possible. And when I think about spending $150 a year to $500 a year per million to potentially avoid one of the biggest boat sinkers out there, I mean, it's a no-brainer in my world.
Yeah. And like, even to break it down further, it's like 15 to $30 a month per million. If you're somebody that has a bunch of rental properties in your name versus an LLC, you're going to see a higher price. Potentially if you have, 16-year-old kids driving, et cetera, if you're regular, it might be I most commonly see about $20 per million. So super cheap, again, low probability, but high catastrophe. And those are the things that you want to make sure that you protect against. So I think that's really important. I think the other thing to think through is kind of like, or going back to your point of like anybody can look you up. Attorneys actually have the ability to look up people specifically, not even Google. They can look up what's in your own name, right? And so this is where people talk about asset protection, right? Things being in trust, LLCs, other things. Like having things out of your name is one way of kind of lowering your risk. But in general, you're still probably going to have quite a bit in your name. So still somebody that, any attorney is going to most likely come to. But the other part about that is your kids are a big risk. And so one thing that we talk about with a lot of our clients is if you own the car for your kids and they're on your insurance, you're the person they're coming after. So if you have kids who are, we see all the time, 18, 19, 20, 21, 22, even above that, or you have parents that are older, you might not want them on your insurance. If they're on your insurance and you own the car and you're on it, they can come after you. So one thing that often makes sense is, okay, gift them the car, title it in their name, put them on their own insurance policy. And one thing we'll hear is, but that's going to cost more. Who cares? If you're 20 million net worth, who cares if it costs a few $100s a month more, but now you take the likelihood of you being sued away, right? Like that's a really big risk. And the highest risk drivers are going to be your kids that are 16 to 20 years old.
Yeah, 100%. And again, everything that we've been talking about in this segment is avoiding the boat sinkers, right? You want to avoid things that are huge destroyers of wealth. When I think about wealth, it takes a long time to build it, but overnight, if you don't have the right coverages in place, it can all go away. And I don't say that to scare anybody. I literally say that because everybody needs to understand that we don't think any of this stuff's going to happen to us until it's too late. Thomas, like you mentioned with the client situation you had, I bet in a million years they would have never thought that they would have had $1 million+ judgment against themselves.
No.
But the reality is it did happen. And they weren't probably being silly about it, but like something happened and they found themselves in that situation. And the reality is risk is what is left after we've accounted for everything else. So we just want to make sure that we're doing everything we can to try to avoid those boat sinkers in the situation.
I love that line. It's like one of the best lines in finance. It's like risk is what we can't see. It's like all the time you'll talk to people and they'll be like, well, if this happens, I'm protected. And like, I just had a client conversation last week about, he was really wanting to be like, okay, I want my entire portfolio in retirement to be 3 dividend ETFs. He's like, this is what historically they did. Everything in here is at 10 years of growing dividends. Like this would happen during COVID. This would happen. Well, it wasn't around 2000, 2008. So I don't really know. And it's like, yeah, but you're just looking back and saying the risks of what you know are protected. What are the risks that don't happen? What if we have a different economic downturn where it isn't like COVID, where we know it's most likely short term and everything's coming back and dividends are cut and now you have to live 3 years, right? Like we don't know what's going to be what's going to happen. So yes, you want to think through the risks, but in general, you don't want to just say, well, that risk is covered, so I have nothing else to worry about, because that's not true.
No, 100%. And I think the other thing that you mentioned there that's really important to think about is what are the nuances of each one of these policies? With umbrella policy, you talked about this at the beginning, that some of your clients don't have access to be able to get them. And I'm in the same situation where, depending on what your situation is, whether that's your work environment, whether that's who you are as a public figure, whether that's a certain type of dog you have, you might not be able to apply and get normal, quote unquote, umbrella insurance. The other thing I would say is, even for people that are able to get umbrella insurance, you need to understand, are there any sort of exclusions in that policy? So I'll give a quick story, but we had an individual that had an umbrella policy. They had a dog, I believe it was a pit bull, that attacked a neighbor and the dog was excluded in the policy, and they didn't realize the dog was excluded in the policy. So neighbor sues, they get bit by this dog, and turns out the umbrella policy actually didn't cover that. Okay, so it's really important to understand, again, going back to what we've talked about this entire time, ask whatever professional you're working with, whether that's your advisor, whether that's an insurance professional. If this happens, XYZ situation happens, what does this policy do for me in that situation?
Love it. Love it. Last thing is just that 5 million is kind of that top end coverage that you can get pretty easily. If you want to get above 5 million, you need something specific. You need a lot of wealth in your name. Like, it's really not normally easy to get above 5. The other thing about it, sometimes you can stack 2 $5 million policies. But like for those high net worth people who live in San Francisco or New York City and they don't have a car, you're never getting above 5 million coverage. Like, I have an ultra high net worth client we're working on right now is like well above 200 million. And he has, call it, just under 100 million in his name right now. He can't get above 5 million. They told him to buy a car just so he could have a car to get more umbrella. And he's like, I'm not going to buy just some car to sit on the curb and not use to get more. But generally, right, if you just rent and you don't own a car, it's going to be hard to get a lot. Like, that's one of the common situations we see.
No, 100%. Well, guys, I appreciate everybody tuning in. As always, please make sure you leave us a review. And Thomas and I are always looking for great episode topics. So if you have an episode topic that you're interested in learning more about, maybe it relates to your personal situation, we'd love to hear that. Send us a message on Twitter or LinkedIn. And until next time.